Good morning, everyone, and welcome to the Quantum Leap Futures morning leap session for Tuesday, May 17th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we come together to take a look at the market, macro to micro, take a look at the structure of the market, drill down to our trade levels, our trade plan, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades at sea in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay. So if you do want to get a hold of me, there is no website, there's no blog. This is not a commercial venture. Send me an email at quantumleapfutures@gmail.com or send me a Skype contact request at Doug_McKay. I'm the one from Windsor, Ontario, Canada. Or if you want to see more of these videos, do search on YouTube at Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2. All right, first things first, let's take a look at the news. So we had, basically we had pretty decent news, and the market sold off on it. It just lends me to believe that it's causing worries in terms of a rate hike with continued good numbers. 9:15 we have, these are all Eastern time, we have capacity utilization, industrial production, and then that's pretty much it for the day. So we'll see what the rest of the day brings us. Yesterday, our main hypothesis was a push up into the 51 area and then a sell-off down through, to test the 37 and take out the overnight low, which was down at I think 35. And Hypo 2 was a move down and then a move up into testing the 51 area and chop around, and then a late day probe. Hypo 3 was a move up, chop around the 51.50, and then a move up and move up towards that 69.75, and that's certainly what we got. We got Hypo 3. Pretty strong trend day, couple distributions. It was a frustrating day for me. Let's take a look at the macro. I always start my day with a candlestick chart, 9 EMA, 20 SMA, looking for slope and separation. You can see that we continue to hold the 9 and the 20, even though we come down and test it a lot. We are still holding it, so we could see continuation pattern on the monthly. On the weekly, again, same thing. We have this parabolic move. We've got separation. We don't have a lot of slope, but we're certainly holding the 9 EMA right now on the weekly. On the daily, we're into this consolidation here. We're unable to hold above the 20. We're trying to hold above the 9, but basically, we're going sideways in consolidation with the possible continuation pattern setting up to the downside. There is a little bit of head and shoulder action going on. The neckline is going to be right around that 32. It's still on the 4-hour as well. It didn't get violated yesterday or last night, so it's still a possibility that this head and shoulder pattern on the smaller time frame is setting up. But until it breaks the 32, it's just a pattern. Going to the 4-hour, you can see the bigger picture. This is the left shoulder head, right shoulder, did not violate it, and currently right now we are above the 9 and the 20, where we're just basically trying to hold the 9. There is a naked cross right here at 20.55. Despite with this move down, it still looks like this market wants to just chop around in this distribution zone around the 61.50. But sideways consolidation on the 4-hour. On the 1-hour, little bit different story. We've got this move off the news, breaking down below the 9 and the 20, weakness coming in on the 1 hour. On the 30-minute, you are getting slope and separation, so we do have the start of a trend to the downside. There's a naked cross right here at 2064, but so far the move is down. If we hold below the 9 and the 20, your target should be down here at the 2045.50, whereas the naked cross is down here. Going to the 15-minute, you do have slope and separation. We do have a trend coming down on the 15 minutes. So we have weakness coming in on the 15, and on the 5-minute, we're getting a continuation pattern. Slope and separation, try to take it back, continuation pattern, try to take it back, continuation pattern. A little bit of a technical gap right here. Tech gap will bring us back up into the 58.50, 58.75, but so far, coming into the smaller time frames, we're seeing weakness in the market and a move. They had this order all night long. This order was sitting at this 2060, and you can see it was there. Whoops, it was there all night, and they finally took it back. So if we come back up to the 60 level, watch for resistance at this level and a possible continuation, down off of that number. Don't know if that's going to be the case, but very suspect that I mean, at one point in time, they had like over 3,000 contracts there, and they nibbled at it, and then finally on the news, they took it out. Taking a look at the big picture. So, I mean, nothing really has changed. We're in this distribution zone, undetermined fair value, bluntness, whatever you want to call it. It's just ugliness and chop. We've got the composite VPOC here at 6150. The microcomposite VPOC is at 53. So that is a destination if we break below 5650. But right now, we're just seeing a lot of chop in here, and this is just difficult trading. I mean, it is just difficult trading. There's just not a lot to go by here because there's so much undetermined fair value. There is all kinds of levels that in this area. If you take a look at the flex level chart, I mean, just look at this. I mean, that's ugliness. It's just like, okay, what do you do? I mean, what do you lean against? There's everything and anything. So these are the days that you just want to make sure that your risk is in check, not like mine was yesterday, and just take the small singles and wait for your best setups, because this can chop in a range, okay, of 25 to 30 points right now, and still be inside of this chop. So just be careful. Key line in the sand is still going to be 32. Why 32? 32 is the value area low of the prior time that we were in this mess. We have a current microcomposite VPOC. Microcomposite value area low here. It's also a microcomposite LVN, so 46 and a quarter is going to be an important number for us today. Above us, really, the key line in the stand still remains the same, 69.75. That takes us outside of the microcomposite value area high. Our overnight high is 69.50. So that's going to remain our key line in the sand above. So key line in the sand above 69.75, key line in the sand below 32, warning line 46, and chop. That's about all I can say about that. So let's take a look at the Globex. We did just put in a new low on the news. We are creating a new week low. It was weak at 60. And now it's going to be weak again. but currently right now the overnight low is 56.75. And our daily 20-day daily ATR is 22 and a quarter, so 20.56.75 plus 22 and a quarter. Our daily upside ATR target is going to be up at 79. And off of the high overnight of 2069.50 minus 22 and a quarter, 2047 and a quarter is our downside ATR target. Our weekly is running 62.60. Upside doesn't change, but 2069.50 overnight high, and our week high now takes our weekly ATR down to 2006. 2006.75. I already put it in. All right, and so our overnight high, 69.50, one tick in front of our key line in the sand, and our VPOC is not likely going to change. It's at 62. Basically, just by yesterday's VPOC, we just created a new HVN, new distribution zone here. And we've got an LVN right here at 59.75. So I'm going to use that as a trade area. And that's about all the information that the overnight gives us. So trade levels, well, 59.75. Above that, I want to get long into the 61.50 and 62.50. The value area low. Now, value areas don't mean a lot on trend days, so I'm actually going to use the 54.75 down to 54 because it's an LVN, and I'm going to be targeting below that. I'm going to be targeting the 51 and a quarter. It was a CHVN, and it's actually 51, I should say. It was a microcomposite VPOC as well. And then our warning line, key line in the sand, is going to be 32. Get rid of that. Our warning line is going to be that, what did I say it was, 46? Oh, I'm all over the place this morning, sorry. 46, yes. $46 becomes our warning line, targeting 43.50. And the naked VPOC, you can see we've got naked VPOCs just outside of yesterday's range at 71 and 42.50. And then all our lines, all our targets, all remain the same down here. 32 is going to be our key line in the sand. And then we've got targets at 29, 27 and a quarter, and that's not our daily downside target, is it? 69.50 minus 22.75, 46. 75. Wow. So our daily downside ATR is just one tick or 3 ticks above our warning line and still within yesterday's range. Okay, upside levels. Above 59.75, you got targets at 61.50 would be the main target, and 62 and the naked VPOC and naked close all in this little cluster area. You've got 63 and a quarter as a trade level. That's the range high. I'm going to use 63.50 rather than 63 and a quarter. And then above that, you've got 62, and then the value area up at 68. There's really not much up there. You've got the 66.50, which was where the VPOC was before it shifted down on the close. And then you've got this 68.50, but I'm going to be using the 69.75. But you can use the 68.50 if you want to front run that 69 for the takeout of the overnight high. And then above that, main target above is going to be the 71. And above 71, we've got the 74.50. And then all our numbers above all remain the same. There's really not much to change in here. So let's talk about hypos. I still think that we're not done with this area. So my main hypothesis is a chop open auction in range, in value, a move down to the 51 area to 46 area, chop around in there, and then rotate back up through up into the 61, 62, and chop in that area. I'm expecting a rotational day today. We had a trend day, and overnight we failed to get continuation, and we come back into the meat of things. So hypo 1 is open auction in range, a move down between 51 and 46, chop around there, find responsive buyers, and then work our way up into the 62 area and chop around between 62 and 69. That's hypo 1. Hypo 2 is open auction in range, a move up, take out the overnight high, fail to break out the of the prior day, maybe even pop up into the 71, and then fail and rotate and come all the way back down and re-auction most of everything and come back down between 51 and 46 and chop around, maybe even come down into the 40 area with a late day probe. So hypo 2 is a pop, failure to break out, or pop and have a failed breakout, and then rotate all the way down through, chopping around in the lower distribution and a late day probe down into 42.50 to 40.50. That is hypo 2. Hypo 3 is open auction in range, move down, test the 46 to 43 level, chop around there, and then get a continuation wave and come down to test this 32, maybe even come down into the 29 and 25 area. So that is hypo 3. Hypo 4, the alternative, is a open auction in range, move up, take out the naked VPOC, naked close, test the value area high and range high, chop around in the 69 area, and then get a continuation wave and a push up through into the 81 to 85 area and back up into that microcomposite VPOC area up here in the 85, 75. So those are my hypos. The Keltner right now, we are on the lower line. This next couple Renko bars is going to tell the story. Whether we get a Renko reversal, a move up on a Renko reversal will take us up to the 62.50. And if we get a single Renko reversal and then close below the lower Keltner, look for a line walk down to the 54 area to test the LVN. Above the Keltner center line, a move up to the upper line will take us up into the 68, 69 and take out that overnight high. It is going to be a rotational day no matter what we see today. I doubt we're going to see a trend day like we did yesterday. I think we're going to get a lot of chop and two-sided trading, and it's going to be ugly. So just be careful with your risk. Don't get stuck in a position. Just take your loss and look for another setup. Taking a quick look at gold. Gold continues to chop in around the 78.40 area. We're below a key level at 76. If we hold below that, look for them to come down, test the value area low again like they did. I'd be looking for a push down to 67.40. Next key line in the sand for gold is going to be the 64.60. Below that, look for them to take out the range and work their way back down towards this 35.50. Above 85, look for them to come up into the next level and CHVN and the value area high up here in around the 93, 94 level. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.